market update today. We're going to go through the numbers fairly quickly at the beginning, and then we're going to go through the Calgary Real Estate Board's spring market update. After the springtime, we're moving into summer right now. CREB comes out with this market report that tells us all about how Calgary has done in the first 6 months of the year. So we'll get into that right after this. But what we want to show you is quickly, we see our total sales going through the trend that we've been seeing for roughly a year now. They're down in the month of June, 15%. Active listings are up 84%. We're seeing it, we were seeing it over 100% in May and over 100%, almost 100% in April. So more and more listings are coming on. That's a good thing for investors. It gives us more choice. But the one thing that will temper that a little bit for investors is the line down there, the average price. It's still on the rise.
Yeah.
It's up 3.5%.
Yeah, it's up 3.5%. And Tim, overall for the year, it's around
6%.
6%.
Yeah.
So Calgary is doing a lot better than places like Vancouver and Toronto. There's panic out there. Like if you read the headlines, we study markets across Canada. Calgary is actually doing quite well, and people are still moving here, Tim. I mean, we're going to get into some of these reasons why Calgary is doing well and where we can see it going forward for the remainder of 2025.
Yeah, so we'll move into CREB's Calgary and Region Update Report for the spring of 2025. This is very insightful. They gather all the stats for us. I believe you can get this thing on the CREB website. If you can't, just send us an email and we will send you this report. It's a very detailed report about the Calgary and area market. So to first get into it, they have a sales and price growth forecast. What we've pointed out here is the sales growth or lack of growth. You can see it's on a 4-year decline. We're going into 2026 next year. We may even see more of the number of sales decline. So since its peak in 2022, the number of sales have been dropping every year since. That's massive. And you can also see the red line on this chart up here on the left, price growth. Prices are coming down as well. But as you can see, it would be the percentage of growth that's coming down. The actual price is not coming down.
Yeah.
On the other side, what we want to look at is the forecast price comparison. This is a forecast price per housing type, and we're not seeing much growth at all in 2025. And the column that I want people to look at is the apartment column. You can see in 2023 and 2024, we were seeing massive growth, like 15% both years, year-over-year growth, and then bang, 2025 hits, and the price growth is like negative for apartments.
Yeah.
So we're steering our clients away from buying apartments this year because we think that's going to fall even more.
Yeah, it is scary times out there. There's just too much supply. Tim, not that there's a massive amount of buildings going up right now, but people are offloading. So what happened late last year, Tim, really, is that prices got to a point where people could cash out. They had been holding on for such a long time on the condos. It came to a price point where they could cash out and walk away from some of these properties. And now it's flooded the market, right? It went up and now it's come back down. So,
and this slide is actually fitting. You can see the storm clouds over the condos downtown.
Yeah, there you go.
Yeah, we don't even see any purpose-built condos for sale downtown. All the towers and all the small buildings are rental only. We'll talk about that a little bit later, but they're purpose-built rental buildings. So that affects us on the investor side more than it does on the sales side. Moving on to the next slide, some of the key economic indicators that CREB goes through. Inflation is very low. It popped up a little bit for May because anticipation of the tariffs coming in, and we anticipate it to go down a little bit more in June. The price of oil is staying fairly steady, even though all that stuff going on in the Middle East. We're still between $70 and $80 a barrel. And the interest rates have stayed the same, the last announcement by the Bank of Canada. So they're still quite low. We still anticipate them to go a little bit lower this year, maybe only a quarter point, half point by the end of the year. But they're very favorable compared to the last couple of years where interest rates were. So the economic indicators for Calgary are still quite good. And the last little chart down here is net migration. People are still coming to Calgary. They're not coming in droves the way they were. You can see in 2023 and 2024, massive amounts of people came to Alberta. In 2025, we're looking at only 100,000 people coming to the province, and then in 2026, between 50 and 100,000. So still, there's more. Alberta's population is just growing and growing and growing.
Yeah, I mean, for many years, Tim, we were between 30 and 40,000 per year, and now we're, you know, a lot more than that.
Yeah.
So we're still doing very good.
Yeah, and then the next slide is new construction. What I want to show here, just got to move something. There we go. The first chart here showing year to date to May 2025 of housing starts. You look down at the bottom, the apartment completions, the percentage of them that are rentals, 72% of the apartment completions are rentals. And the ones under construction, the last little number here, 66% of new housing in Calgary being built is apartment rentals. Mm-hmm. So it's another indicator that there's going to be a lot more competition for landlords that have apartments for rent.
Yeah, and what that does for everybody out there, it brings the rents down. So, you know, I keep reading that there's a housing shortage in Calgary. There might be a detached housing or semi-detached housing shortage, but not with apartments. I mean, there's 8,000 rentals right now in Calgary. And Tim, out of those 8,000, you would predict roughly 60% to be condos.
Yeah.
Right? So that really hurts the price you're going to get on your lease rates for condos.
Yeah, and you can see it down here in the average vacancy. It's starting to rise a little bit. It's still, that's the all. Standardized vacancy would be down here around 5%. So it's on the rise from the last couple of years.
Yeah.
So that will affect those areas of the market where there's lots of supply, the apartment market. If you're in the different housing types, half duplexes, whole homes, townhouses, the vacancy rate will be a little better, and it'll be quite a little easier to find tenants. We're finding that on the leasing side of our business. Mm-hmm. Putting tenants in those housing types is actually quite easy still.
Yeah, we actually won't even touch condos right now. If we had to rent a condo out, we just wouldn't take it on unless the price was really good.
Yeah.
Especially in new communities, there's no way, because when these apartment buildings are built and their rental purpose, you know, then all of a sudden there's 300 rentals for rent, and it makes it very, very hard. So there's a lot of people from Ontario and BC that invested here thinking that it was a good investment, and it wasn't. And we've been saying that for years.
Yeah, and the developers in the newer areas, they're building, some of those small apartment buildings are to be sold, and some of them are rental purpose only. So if you got investors buying in the building that's for sale, they got to compete with those 300 units in the other building. So it's kind of an unfair situation to get into. And by these developers fobbing it off onto Ontario investors don't know because they're not on the ground here. Mm-hmm. Calgary investors have the advantage of knowing what's going on around the new builds. So, you know, beware if you're looking at new builds.
Yeah.
Okay. The next thing, the detached housing market, you can see that sales were down almost 5,000 units. Inventory is up 2,000. Looking at the bottom of the chart here, you guys can read the description as you will. Sales to new listings is 56%, mm-hmm. and that's down quite a bit. Months of supply, 2.2. So in the detached housing market, we're starting to see the supply start to outpace the sales. So beware of that as well. The next one is semi-detached. There's a lot fewer sales of semi-detached in Calgary because there's a lot less being built. It may look like there's more being built if you go to the newer neighborhoods, but the actual housing type that's in demand the most is detached in Calgary. Again, sales are down on those, new listings are up, and inventory is up as well. Row houses, you can see that there's more sale of row houses, even though the number is down 16%, than there was in half duplexes.
Yeah.
So the builders are building more and more row houses, and included in that is the small fourplexes that are built in all the inner city areas, Marda Loop and Richmond and places like that, where you see those fourplexes going up on every corner. Okay, the next thing is the apartment one. This is where the numbers are the most depressed. The sales are down 31%. Inventory is up 93%, and new listings are up 9%. So we're seeing numbers in the apartment sector that are maybe cause for some concern, because if this trend continues, it'll be like 2018, 19, where the downtown condo market was just flooded with listings and nobody could get the price they were asking for. So keep an eye on numbers in the apartment market. The last one we're going to look at in this part of the market report is the surrounding communities. What we're seeing here is positive numbers in the benchmark price. It's basically the average. They define the benchmark price as the average price of an average house in an average community in these small towns. And in all of the towns surrounding Calgary, the benchmark price is up.
Yeah.
So it's what, as Ed talked about in the beginning, putting our investors into Okotoks, you're seeing some very robust increases, even though the market overall is kind of flat. The benchmark price for Calgary, the Calgary Real Estate Board reports that as a negative, but we look at the average price when we're looking at that. We see that up 3.5%. So that's Krebs' spring market report, going over the numbers of how the market has done in the last 6 months. There are still a lot of factors out there. Donald Trump is one of them. The Liberal minority government is another, that are going to put some uncertainty in the housing market. And we're going to keep a close eye on it and keep you guys informed throughout the summer and into the fall.